Welcome to your Mortgage Insider update for March the 12th. Happy birthday to my boy Cal Lewis. The CPI data came out today, just a touch above expectations, but still making progress on the core inflation coming down 0.1%. So basically, inflation is very slow to make a move. Core inflation is the Fed's main target. It strips out food and energy costs. So overall, CPI is up slightly at 3.2%. Many had expected it to come down a little bit or stay the same at 3.1, but core inflation coming down from 3.9% down to 3.8%, basically just converging the two. Rarely, and this is actually a result of our current state of the economy that we have. Let's take a look at how it's affecting the charts. As we get started following the CPI print, 4.15% on 5 basis point higher on the 10-year Treasury. This is coming up from what's been a downward cycle, so we'll take a little deeper dive on that. Mortgage-backed security prices are down 10 basis points. Red is bad. Investors are paying less for those bonds, rising the interest rate slightly to the consumer, right after on the heels of a little reduction we saw in the last few weeks. So as we see over the last few weeks, since February 1st, uptrend up until end of last week in February, then a nice little downtrend, hitting the bottom just on March 8th. Coming off that CPI report, a little bit of a bounce higher, gets us back above that 50-day average. Not a great sign, but if we can stay below these 200-day and 25-day averages, and if that can create some kind of a support or a ceiling on the interest rate at 4.15%, that's going to bring us to a pretty solid, interest rates on the 30-year mortgage below 7%. We're in the 6.8% range as a result of this last week. So take a look at the mortgage-backed securities. Like I said, are down slightly. This is after an uptrend. Improvement or increase in the price on mortgage-backed securities is going to be a downtrend to the interest rate to the consumer. So we can see as this went up on the price, interest rates, like I said, over the last few weeks have come down. Really hanging on there right above this 50-day average on the prices to mortgage-backed securities. With the CPI data today, the Federal Reserve meeting next week, we're hoping to just hang tight and keep some steady rates ahead of the Fed meeting and announcement. They are not expected to lower interest rates. They are expected to stay steady, but might give us little hints into when the next federal funds adjustment can take place. So we'll continue to keep an eye on inflation over the next couple months as the slow drop in inflation and the core inflation specifically down at 3.8% today is not going to spur any action from the Fed anytime soon. Best case scenario, their next couple of meetings coming into the spring and early summer in June is the most likely time for there to be, hopefully a slight drop in the federal funds rate. But don't hold your breath. It's going to be a while before summer breaks. Have a great day.